So what we're beginning to see is as long-term holders increase, in other words, they're called hodlers, hold on for dear life, right? As those increase, another phenomenon is evolving here, where institutions are developing an interest in this new asset class, and they could that their incremental demand as the long-term holder base increases could could force the price up parabolically, which would destabilize the ecosystem. To get back to this, okay, we have this institutional interest brewing in Bitcoin. It's mathematically metered to go up at a measured pace until we hit 100 million units. But let's just say right now, because of the institutions expressing interest in this new asset class, the marginal demand goes up and drives the price up dramatically to $1 million. Bitcoin's at around $30,000 right now, to $1 million. Let's just say that happened in the world that we've been describing here. Do we need to get through that first, as you say, Ophelia, and stabilize the ecosystem as more and more become long-term holders, or can we get to the world that you're describing, Art, with these other private actors?
Cathie Wood and Ark Invest are extremely bullish on Bitcoin and cryptocurrency in general. In fact, Cathie was one of the first institutional investors of Bitcoin and started buying it when it was just $250 a coin. To date, she still calls it her best investment. In her latest video update, Cathie, alongside award-winning economist Art Laffer, speaks on an interesting future scenario. Could Bitcoin truly take the place of the dollar in the future? Make sure to stick around to the end of the video, where Cathie breaks down the combination of institutional interest in Bitcoin as well as the long-term holders of Bitcoin increasing could send Bitcoin to $1 million per coin. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 3,000 others to become a better crypto investor right now. Now here's Cathie Wood and her Bitcoin outlook.
I think what I'd like to explore here is clearly Bitcoin is playing one of the three major roles of money: store of value with a quantity rule, right? But we're in a period of great experimentation, which Hayek said we needed to find the best monetary system. And I'm wondering, and maybe Ophelia, you can jump in. I know what Art means, and I agree with this idea of a price rule and contracts based on a price rule. Do we think that maybe in this grand new experiment that there might be a fork of Bitcoin to enable a price rule? I've been toying with this idea and trying to figure out the answer. So I am wondering if so in this experimental world that we're in, and I think Hayek would be thrilled to be studying this right now, I am wondering if for that, in order to serve as the means of exchange, as opposed to just the store of value, how would we accomplish that? Would it be it's hard for me to envision this, a fork. So basically, these are software programs, and if you want to go in a different direction, you can. Now, Bitcoin is Bitcoin, and it's a powerful ecosystem, and we don't think anything's going to derail that. But if someone wanted to develop an ecosystem, related to Bitcoin, it's the core developers who they will never. I mean, from what I can see, what you can see, probably what we all think, is that the core developers would never modify anything in terms of the mathematical metering to get to 21 million units. The problem with that is, what if the demand for it is much more than 21 million units as the economy evolves? There's no adjustment mechanism to meet increased demand. So what we're beginning to see is, as long-term holders increase, in other words, they're called hodlers, hold on for dear life, right? As those increase, another phenomenon is evolving here, where institutions are developing an interest in this new asset class. And, they could, that their incremental demand as the long-term holder base increases could, could force the price up parabolically, which would destabilize the ecosystem. To get back to this, okay, we have this institutional interest brewing in Bitcoin. It's mathematically metered to go up at a measured pace until we hit 100 million units. But let's just say right now, because of the institutions expressing interest in this new asset class, the marginal demand goes up and drives the price up dramatically to $1 million. Bitcoin's at around $30,000 right now, to $1 million. Let's just say that happened in the world that we've been describing here. Do we need to get through that first, as you say, Ophelia, and stabilize the ecosystem as more and more become long-term holders? Or can we get to the world that you're describing, Art, with these other private actors? Well, what happened was, during the regional bank crisis, and you and I did a podcast during it, the regional bank crisis, Bitcoin, as regional banks were imploding the stocks, Bitcoin went from 19,000 to 30,000, and it's 30,000 today. Now, part of the reason it's gone back to 30,000 after a little bit of a jog here is speculation about a Bitcoin ETF, and we can't say anything about that. So that the government, if the government understood what we are talking about now, about the potential for Bitcoin, in 2009 or 10 or 12, they might have just tried to squash it, but it has been a little bit of a surreptitious it's been couched in terms of technology, as a matter of fact, and therefore is it in the purview of any particular government agency? Do you think we are past the point where the government can come in and squash this? In my experience, when investors focus obsessively on a number or two, and in the case it is employment and PCE deflator, lagging indicators that the Fed is using in its monetary policy, just obsessive, compulsive. I know we're near the end of that being important, and that kind of fits in with what you said, Ophelia. And then Art, what I love about these conversations with you is you are steeped in economic history. You and you understand monetary ecosystems better than anyone I know. And so what you're saying is, you discover what is happening through crypto, and you're saying, that's it. It increases my confidence and my understanding of how this might evolve with the other actors.
As long as it can go from a quantity rule to a price rule. The price rule is central. Without the price rule, this system will die. It needs to go.
Okay, and so that is where we need to go on this next one.
And that's where I think other companies, like what Ophelia was saying, other instances like Berk, and these can become financial intermediaries, issuing their own liabilities, having their own assets, and being able to change the quantity to make sure that prices are stable. Once that happens, bye-bye dollar, bye-bye ruble, bye-bye mark, bye-bye yen, Buy pound. The pound has gotten so bad, ladies, that they're now calling it.
So there's Cathie Wood and Ark Invest's bold outlook on Bitcoin and the potential future of cryptocurrencies. We hope you found this conversation with Cathie and esteemed economist Art Laffer both insightful and illuminating, and that it has spurred you to think more deeply about the transformative potential of Bitcoin and other digital assets. If Bitcoin's journey to potentially replace $1 or even reach the staggering height of $1 million per coin piqued your interest, then you'll definitely want to stay tuned onto our ongoing coverage. Remember, our daily 5-minute crypto newsletter is an excellent resource to keep you informed with the latest expert predictions, on-chain data breakdowns, and breaking news in the crypto world. If you haven't already, click the first link in the description, enter your email, and join our community of over 3,000 other proactive investors. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all on the next one, and as always, all the best.